The shared economy. After the Lehman Brothers crisis, the global financial crisis of 2008, shared economy was the buzzword, it was the way to go. And we saw the meteoric rise of companies like Uber, like Airbnb. Back home, it was Ola and Oyo that rose to fame, and of course, they entered the unicorn club. Everything was going right. And then things started going wrong at both companies. Whether it was exits or not being able to reduce the cash burn, all of that was happening. And then came along COVID-19, the pandemic. What is the future of the shared economy? A few years ago, in fact, a few months ago, would you have ever imagined saying, I'm not going to get an Uber or an Ola, I might get a disease which is now a pandemic? None of us had ever imagined that, right? None of us ever imagined that traveling would be bad. Look at what's happened to Oyo. So what's the way forward? Can they bounce back? What did the founders of Ola and Oyo do when the chips were really, really down? The odds were completely stacked against them. Here is Bhavish Agarwal, media reticent, the founder of Ola, as well as Oyo's founder Ritesh Agarwal, in conversation with industrialist Sunil Munjal at AIMA's National Convention. We get you an edited excerpt.
So one fine day, I just go up to my parents and and I tell them about this idea that I want to build a website. Those days, 2010, there was no concept of an app. So I said I want to build a website for you to book your cars from Delhi to Agra, Mumbai to Pune, within the city, etc. And to anybody who is not in the tech world, it might sound like a travel agency. So that's what he said. Ki beta tum travel agency khol rahe ho kya? Dad, don't worry. Give me a couple of years. I'll tell you. You'll see what I'm trying to do. But to his credit, he was very supportive of my journey and let me do my own thing.
Right from the early years, there's always this, one kid who's trying to do different things, not always for the better. I used to be that one. And right from I thought telecom was growing very quickly, right? So every now and then there would be some new launch or new interest that would come in. This was a small town where essentially a lot of companies and the representatives found hard to do business in. So in some way I got introduced to the relationship manager of Bharti Airtel, which was a very fast growing company, and I had the good opportunity to do the on the ground sales of SIM cards and so on in little towns and villages. And what's interesting is that's inspired a lot of my thinking in Oyo. So the neon backlit boards became big branding thought. So at Oyo from day one, I've thought of branding with neon backlit boards being very critical. The pricing, if you see, there used to be the $9.99 lifetime prepaid on Airtel. So I felt that maybe starting at $9.99 makes sense. So Oyo started retailing at $9.99 its rooms to begin with. So I took a lot of learnings, some of which worked, some did not. But I think from the early days when you're on the ground, each part of the learning counts, I believe.
So I actually break Ola's journey into 3 phases. The first phase is the struggle phase, which is 2011 to 2014, I would say, where we had money, but some money, and our focus was limited in the size and scale of operations, and we were trying to find product market fit and trying to figure out what works, what doesn't. The second phase I break out into is from 2014 to rest of 2017 or 18. Now that phase has been what I would call riding the tiger, where and this is not just about Ola or this industry, but industry after industry in the internet space. Once you figure out the product market fit, and you have capital to scale, you have a phase of really aggressive adoption by consumers, like an S-curve, and a really aggressive scale up for your own business. Now that is something where if you're a first-time entrepreneur and building a company, you have to pretty much hold the tail of the tiger and make sure you don't fall off. So your company is growing, let's say 5x year on year or 10x year on year, and your organization is growing, you're adding thousands of people every year. So that phase is one which is a very different challenge to navigate than a steady state early phase or even a later phase. And the third phase for Ola has been the last 2-3 years, which I would call the phase of consolidation. where you have achieved a certain scale, the industry has penetrated a certain amount, and now you want to make sure your business model is working, you're profitable, your margins and all are now going, and your organization also is getting structured and in a more systematic way. Now, when we entered this third phase, sometime in late 2017 or early 2018, it was quite clear to us that the Indian market we had executed fairly well to have a leadership position in a duopoly, and also now the market will continue to grow, but it will grow not 200% year on year, but 40-50% year on year, which is still very healthy growth because the penetration levels in our industry is still low. And we also realized that the technology platform that we have built for India, the business processes and the execution systems we have built for India can be leveraged in other markets globally. But we wanted to also be very methodical into which markets we go to. So, as with any Indian, we chose other cricket playing countries. Even if the business doesn't work, you can at least go through the cricket. so we started our business in Australia, New Zealand, and in the UK over the last 2 years.
We've missed out on most of the cricket playing nations, big cricket playing nations. So maybe I and Bhavish are complementing each other there. But first off, I think on a lighter note, for folks to know, in my discussions on business reviews with Mr. Munjal, he's generally not as nice. I'm just joking there, Mr. Munjal. But I think going back again from the Oyo story, there are two reasons why our business exists. The first is, on one side, we are able to serve large number of small hotel owners and homeowners across the world. If you were to think about it, most of the branded hotels that we see around ourselves typically are more than 100 rooms in size. You'd find it inspiring or interesting that 95% of the hotels and vacation homes are actually lesser than 50 rooms or 40 rooms in size. And there is no brand or technology platform that understands how to solve for their problems and challenges. Right from day one, we thought that is one segment that we understand really well that nobody else does. We understand how to make money for a hotel owner for a 40-room asset and generate higher RevPAR for them. We will consistently do it in all the large markets. Large markets because the amount of effort required to go after these opportunities is anyway the same. So might as well go after big outcomes. I will break down our global strategy in pre-COVID and post-COVID era because some part of it is changing with the impact of COVID, and hence it's important for us to think forward and see how these changes will look like. So pre-COVID, we were going after the big 5 markets and sort of saying that we want to create big impact, which is India, Southeast Asia, China, Europe, and US, all 5 big markets, and we wanted to make a difference. As COVID impacted our business, what we learned was we all have limited resources, and this is the time to be able to invest in your processes, systems, technology, and so on. So we spent significant amount of time, last 4 months, I was telling this to Bhavish as well, I've been spending almost 60-70% of my time as a product manager, helping review product pipelines, what kind of technologies are we building for our consumers and partners and so on. And along with that, the view is saying that double down in geographies, which we have been doing extremely well in. So we saw that India, Southeast Asia, and Europe are 3 geographies where we had significant market share. We understood the markets very well, and along with the market share, we had very strong margins and consumer and partner love. We felt we will double down in these geographies. And in geographies like China and US, which are strategic, we will continue to serve our technologies and gain market share through that, but not with the aspiration of being clear number 1, but probably with an aspiration of being a clear challenger in the next year. But between India, Southeast Asia, and Europe, we want to be much beyond number 1. We want to continue being absolute first choice in the mind of our customers in terms of the product experience we bring. So it has gone from, like Bhavish said, 2 phases of rapid growth when you have a product market fit to a phase which is more consolidation and focused on doubling down in the geographies where you're seeing great impact. And we've been talking quite a bit about how we allocate our capital between geographies and basically being able to make sure we use these times to create very strong moats, given the relative benefits companies like us have.
The relationship between China and the world has become very complex in recent times. India and China are also having their issues. Now, you have a significant business in China. What impact do you expect on your business in China? Are you seen as an Indian entity in China? Are Indians going to look at you also as a key Chinese player? What do you expect on both ends?
Sure. I think first off, we've been lucky that back here in India, we've gotten the opportunity to build our company in times where entrepreneurship is seen as a good thing. Where I mean, before I started, I would imagine that this would be extremely hard. So due to that, as we've built our company, we've been lucky to be seen as one of the products that is designed and built in India and has gone global over a period of time, and we are very thankful for it. Specifically in China, if I were to sort of share one of the things that I'm seeing across the world, not just in China, is that geopolitical impact is going to become one of the big risks for companies which are global, because every country, and of course China is one, but in the same way there are various countries across the world which are enacting policies where over time companies are being seen as diplomatic enablers, not just as big businesses. And given that, I think our policy has been to be globally local. That is, you mentioned this in Japan. If you travel around, you will see Oyo experiences look slightly different. If you're in London, it will look slightly different. If you're in Denmark, it will look slightly different. But the technology layer is the same. So technology is a leveler on the consumer and the partner side, but the brand and the cultural impact, the employees, the leadership, to as much extent as possible, are local in terms of format.
Right.
So that's what has enabled us to make sure that so far we are seen generally as good for the countries, because we bring jobs, employment, and more opportunities for people. But that said, of course, we're watching the situation very closely.
How have you handled the cost issue and the people issue? Because when everything came to a grinding halt, it was a big challenge for most businesses that your costs were still, which are inherent in the organization, are still running, whereas revenue came to a stop. How did you manage that? Both of you, quick, short answer on that. Okay, Ritesh, you go first.
Sure. I think, we saw, of course, the lockdowns come in India.
I'm also picking from the many questions that are coming. I'm trying to weave them into my own questions. I'm not asking them separately, but I'm actually trying to weave them into my own questions as well.
Yes. No, that's a fair question, and I think probably one of the challenges that every business leader today is dealing with is essentially, regardless of cost challenges, being able to manage and motivate large operating resource when people are working from home. A large part of the populations are working from home is in itself challenging. Now, on top of that, the impact that our businesses have had is very significant. As lockdown started, we realized that all hotels have to go on pause, at least in India. And in that period of time, there were broadly four things that we could do. The first one is, initially we cut all the controllable costs, right, like that of forward-looking capex, M&As, and so on. But in companies like ours, which are, like Bhavish said, more technology-led, manpower is generally the largest part of the cost structure, almost 70-80% sometimes. Given that, it became very clear to us that unfortunately we had no choice but to also enact people cost driven measures. Our principle was to try and reduce the pressure of layoffs, because we had seen this furlough system work well in various other parts of the world before that. So we brought in furloughs, tried to be as thoughtful we could, but frankly, just given the interest of short time, I think no matter how much thought you put in, reality is it was one bad option over another. So you had to choose the least bad option, and the least bad option had to ensure that people could get the school fees of the children, enough savings, and so on and so forth. And last but not the least, I think beyond that, it was critical to motivate people. So we gave around 2.5% of our company newly issued shares to both employees who were furloughed as well as current employees, so that we made people a critical part of our future. We combined that with changing the ways of work, right? Like in video call formats, people are working on back-to-back video calls all week. We made it mandatory for people to have 5-day work weeks. We made it mandatory for people to block times with their family over the week, and so on. just to remind people that it's not a sprint, it's a marathon. And we have to be at it for a long time to be able to bring our customers the best outcome. So it's had to be a balance on both sides. The best word in the crisis I've learned is balance, which has been most critical. Bhavish, over to you.
We should take a shot at this.
I think Ritesh, whatever you said is it resonates with me fully, and all business leaders and all of us have had a very challenging time balancing all the different forces and all the different focus areas. And I think the only thing we can do is, in our own ways, try and execute the people side of things in the most humane way possible. And even on our side, we had to take some cuts. We made sure our people have the right kind of support system, even after they're either furloughed or asked to move on. Insurance, health benefits, compensation benefits, all those things we made sure is in as humane a way as possible. What I'll also add to what Ritesh mentioned, there's obviously a lot of challenge in working remotely, and some organizations are doing it remarkably well, and some are still learning how to get there. We've tried to find a balance. Again, the operating word is the balance. Right? So we've tried to, because people are distributed now. Many of our people have gone back to their hometowns. We've also tried to, set up our offices to have a very safe, hygienic working environment and have some portion of our workforce back in office, so that collaboration can begin in some way. Some people do need to be in office for different parts of their work. For example, in the hardware side, we need people to be in the labs doing their testing, doing their product development. And we've tried to ensure we're following best-in-class protocols on screening or on testing and tracing within our own organizations, so that people get the confidence to come back to office. And frankly, many people actually would want a balance between working at home for a few days and also working in office, so that they can be more efficient.
What percentage do you have now in office?
So we now have across all our businesses about 25% people back in office.
Fascinating conversation there. Bhavish Agarwal, media reticent, founder of Ola, as well as Ritesh Agarwal of Oyo. They are the ones that made shared economy, the superstars of the shared economy. And of course, all of that coming tumbling down thanks to COVID-19. The chips are down, but you heard both of them how they plan to be resilient and fight back and give it all that they have. We'll take a short commercial break. But as we do that, Microsoft, about 24 hours ago, less than 24 hours ago actually, made a big game for the game world. Yes, it did buy a company called ZeniMax for about $7.5 billion. It's an American headquartered company, supposed to give a big boost to Microsoft's gaming business. But we thought this is a great time to also figure out Microsoft's recent acquisitions, the big ones coming up for you on your screens. Of course, LinkedIn is the biggest of them all. $26.2 billion was the LinkedIn acquisition. Skype was the second biggest at $8.5 billion. You've got the others on your screen as well. Nokia, the Nokia's phone division was, of course, at about $7.2 billion. This week on South Central, we'll also be analyzing what this acquisition means for Microsoft, the latest one, and what it also means for Sony and the PlayStation. With that, we'll take a short commercial break. Many thanks for watching this segment. We'll be back in less than 2 minutes with many more stories, including an exclusive one on Google.